Welcome, everybody. I'm Rob Biederman, founder and managing partner of Asymmetric Capital. We are so happy to have everybody here. I had high expectations for this place. I'd never been, and I think they've been materially exceeded. We have an awesome panel. We are so thrilled to have unbelievable people here from a bunch of companies across the fintech spectrum. And we're so thrilled to see all of you. And the space is perfect. We're going to have a fast discussion. Keep it interesting, keep it light. Maybe a little lightning round, maybe some things they're prepared for, maybe some things they're not. I have to importantly thank our sponsors who made such an unbelievable place possible. Obviously us at Asymmetric, and then Gong, which we'll talk about in a little bit, where I'm thrilled and lucky to be a personal investor, Stripe, BMO, and Capchase. So we're going to do quick introductions of all the panelists. I believe all the rest of them are mic'd up. And then we'll do questions at the end. Does that work? Wonderful. Okay, start with Erica.
Or am I doing, or are you doing?
You're doing.
All right. Erica Dorfman. I lead global financial services at Brex. Brex is a payments and expense management business focused on both early stage and enterprise businesses. We are really excited about what we've got going on building this year. So excited to talk a little bit about that and all the go-to-market stuff today.
And had I remembered to ask you for a fun fact, your fun fact would be what?
I, during COVID, was housemates with a K-pop star named Eric Nam.
That's amazing.
Wonderful. All right, next, Chelsea Palmer, who is head of sales at Check.
Yes, I am Chelsea, lead the sales team at Check. Check is a payroll infrastructure company, so we help software platforms build payroll products and payroll businesses, all in a white labeled fashion. And so, here with some of my teammates here today, and excited to share a little bit more about our experience building Check. We're 100 people, so we're much earlier on in our journey compared to some of these other folks. And so, we'll kind of share more details then. My fun fact is I swam Division I swimming at USC and also went to the Olympic trials twice.
Wow. So we'll transition to humble brags going forward for all the other participants. I should have mentioned I played JV basketball at Princeton, and I scored 3 points once in a game. So that was cool. Mike.
I'm Mike Saltzman, co-founder and co-CEO at EvolutionIQ. Asymmetric is one of our awesome investors. EvolutionIQ is a B2B AI native insurance application, and we help large insurance companies get claimants back to health and productivity faster. And my fun fact is I went to summer camp with Jared when we were 8 years old.
And my fun fact is we invested in EIQ, and we're really lucky we did that. And the deal was led by Nancy Cho, my colleague, who really is the brains behind this whole operation. When we made the investment, they had a certain amount of ARR, we'll call it 4 million. And we got to the first update meeting, and Mike said, so current ARR is about, many multiples of the 4 when we invested, but it was only 30 days later. And I said, no, Mike, we want to know your current ARR. He said, that's it. We closed it all since you invested. It was like, this never happens where you actually write a check. The management team does exactly what they said they're going to do, but they do it all in the next 29 days. And so to say EIQ has been up and to the right doesn't even begin to communicate it. And so we're very lucky, and hopefully my grandchildren and their grandchildren can continue enjoying your success. Next, Russell.
Hi, everyone. Russell Banzon, VP of Marketing over at Gong. If you're unfamiliar with Gong, Gong is an AI-based revenue intelligence platforms helping sales teams drive insights, productivity, and efficiency. We're thankful to Rob as an early investor. Fun fact for myself, never been to the Olympic trials, unfortunately, but I have done 15 years of hip-hop dance. It's a passion of mine that I've been doing for a very long time. I'm going to have to stop by the bar maybe 3 more times to get going, but excited to be here.
Wonderful. Jared.
Hey everyone, my name is Jared Davis. I lead one of our startups sales teams at Stripe here in New York. For those who don't know Stripe, we are on a mission to increase the GDP of the internet. We are a global payments business. We offer payments products and a number of software and services on top of that. We work with millions of companies, and there are about 10 Stripe employees throughout this room. If you have a question about the company, find one of them afterwards. And my fun fact is that I met the entire Asymmetric team and about half of your founders at your annual offsite at an après-ski bar this January.
This was at the Mangy Moose in Jackson Hole, where all good panel discussions begin. So we're going to start with Jared right off the bat. Obviously, Stripe, unbelievably prolific. I think probably almost all of our portfolio companies use it. Catalent Technologies, the company I founded, obviously uses it. Selling in fintech different than traditional SaaS. Maybe tell us why that is.
Yeah, I think it's a great opening question. I think there are a lot of similarities between selling fintech products and maybe selling broader B2B products, which I imagine is why many of you are here today. I think there are a couple of interesting places to start when thinking about fintech first, and this is definitely how we approach our business at Stripe. And so the first is when we sell our products to another company, we are a B2B payments provider, one of the first things we think about is not just what problem are we solving for our customer, which is the merchant, but how does that merchant make money themselves? Who are their customers, and how are those customers interacting with the merchant? So there's kind of like two levels of thinking. What is the problem that we're solving for the merchant, and then what is the problem that that merchant is solving for their customers? And that is definitely unique to fintech, probably has parallels to B2B, but not all B2B companies have that B2B to C element. The second, I would say, is how we approach our business around forecasting. When you sell a B2B product, it might be very easy to look at X amount of software products that you're selling at Y dollars per year times Z number of months, and whatever that formula gets you, that's what you're booking. And in fintech, it's a whole lot more complex than that, since we are driven by volume. And who knows what a company's volume will be in month 12, looking at it today. We work with a ton of startups. That's actually the business that I work on. There are many startups in this room and on this panel, and a lot of your volume estimates can be thrown out the window 3 months after. So that's an interesting part.
And obviously, just a follow-up that we hadn't discussed, so hopefully you can answer this in the flyer. We should probably talk to Stripe about somebody new for your role. So Stripe, ubiquitous, probably works with most VC-backed startups. What's the most common objection you guys get, and how do you handle it?
The most common objection that we get, well, we work with a lot of startups, some of whom are pre-product and pre-revenue, and many of whom have found product market fit and are scaling quickly. I think the biggest objection that we get, well, I'm going to give you two. The first is what is the best way to integrate Stripe into our product? And we have a number of no-code products that are really attractive to non-technical founders and people who just want to get something out the door and start collecting revenue to prove to their investors that they can, in fact, make money. And the second is, how do we integrate that through an API and bake it into our fully bundled solution? And then the second, which maybe many of you have interacted with Stripe on, is our price. We're a premium price product, and we get a lot of pushback on our pricing.
And how do you handle that?
You got to pay for value.
Wonderful. Okay, so what we do at Asymmetric, we back companies at the earliest stage, pre-seed and seed, typically before they have any revenue and often before they have a product, sometimes before they're incorporated. Something they ask us about all the time is how to manage the design partner process. And when I founded a company in February 2013, design partners hadn't been invented yet. So we basically just put the website out on the internet and hope people would use it, and our design partners were whoever showed up. Having said that, two companies here were a little more deliberate. And so we're going to ask Chelsea and then Mike, how did you think about the design partner process? What did that look like? Obviously, two very different go-to-market propositions. Chelsea.
Yeah, so again, with Check, we are payroll infrastructure. And so almost every single partnership that we work on really kind of goes through like a co-designing process. We think about kind of the segment for the partner in which they operate in. So whether that's vertical SaaS or workforce management, the payroll product that they're building for their customers is going to look different partner to partner. And actually, Check's kind of like coming to be, as a company, was based off of us working with our partner Homebase 5 years ago to even come up with this idea of embedded payroll. So Check was the kind of the creator of the category. So we are a category creator for embedded payroll. And so I think that that's like really unique and very much baked into our DNA from the start. And so Homebase's business, if you don't know Homebase, they mostly focus on like restaurant shift management, and their entire kind of existence was based off of offering payroll. Payroll is really tightly tied to the number of hours a restaurant shift worker might work, then equals how much they would get paid. And so going back again 5 years ago was really kind of how Check came to be by developing a payroll infrastructure offering to enable Homebase to build what now is, a multi-million-dollar payroll business. And so from that kind of course, it's kind of set off all the other kind of partnerships. And so every single deal, like I said, that we work on is really co-designing with our partner, because leveraging our API gives you a ton of flexibility to build a payroll product exactly for the users that you serve. So,
annoying VC follow-up question. When you think about co-designing something every time, that my sort of MBA framework is going off for a while, it sounds like it's going to be low margin and annoying. How do you stop it from being that? How is it off the shelf at all?
So I think what we try to do is develop repeatability with the certain types of segments that we operate in. So like I said, we work with vertical SaaS, workforce management, and horizontal SaaS. And there are similarities, especially let's take hourly workers, for example, building an hourly worker payroll product for restaurants versus, construction. There are repeatabilities, and then there's small tweaks that you kind of can then implement to make it exactly fit the payroll product they need to build. But I would say a lot of what we've done is just built those playbooks, and then now we kind of drive those playbooks every single time we're talking to vertical SaaS. We kind of have a recipe that we use. So
good answer. Mike?
I also didn't know the term design partner until today. So that's cool. I would say our initial kind of design phase sucked in a lot of ways, and that became a real strength of the business. So what we do is we take insurance companies' data, which is highly sensitive, PHI, PII. If it gets out, they're getting sued for a lot of money. That's the structure. We cannot get that data anywhere else besides insurance companies. There is no publicly available academic insurance claims data set. So how do you build a product based on AI for insurance claims without insurance claims? How do you get a customer to build the product if you don't have a product? Okay, so that's kind of sucks, right? So essentially what we did is we called up a lot of insurance companies, and we tried to align on the problem and the hypothesis that you could do it better. Not what the product would do, not how it would work, just the idea that this KPI could move in a fundamental way if you change the behavior of the organization. The behavior going from insurance adjusters go by their skill and their gut experience to an AI system guides them to the best actions. Once we found alignment with an executive team on that idea, real alignment, we found someone who's willing to break the chicken and egg, which is we found someone willing to give us their data. It's highly sensitive. If we fuck that up, that's bad news. Pay us for the pilot and for us to kind of go away for 6 months, work with their frontline teams, and come back with something that we thought had some value. That process was horrible, but the benefit of it was when you found the design partner, to use this fancy lingo, willing to cross that chasm, willing to put up with PII risk, part with a few dollars, executives at companies don't like to do initiatives that take 6 months that amount to nothing. When you found someone willing to jump over that chasm for this idea, you knew that, well, if you solve it, it's obviously valuable. And so we raised our first seed round with a customer but no product. And we had alignment with this company. They're our longest standing customer. They just signed a 5-year, $50 million deal with us to extend an already 4-year partnership. And it's because we had such deep agreement at the conceptual level and nothing else mattered. And they were willing to take a real leap. And so I would say find someone who's willing to go through pain. If you're doing design, partnership or whatever, don't do it for free. It's really easy especially in the B2B world, for companies to spray and pray, let's try everything. Unless someone's going to sign a check and put their personal, reputation inside the company at risk for what you're doing, it's just not obvious anyone gives a shit. And one of the easiest ways to get killed as an early stage startup is to work with a big company that doesn't care about you. And so you need skin in the game on both sides.
Yeah, I just want to underscore that again, because I think that could be in the most important things I learned certainly in 10 years as a founder and CEO. If there's somebody who's not willing to write a check on the other side, you don't actually have a real design partner. And I think we feel that pretty conclusively. And I think one thing you guys have done that's so impressive is driving incredibly high ACVs and the principally 7-figure range. There was a time when you obviously had to get that first penguin to jump in the water, and we probably shouldn't say who it is, but a very important, very large commercial insurance player. What do you think was their biggest concern, and how did you guys get at it?
Biggest concern that we solved?
Right.
I think, the insurance business has been very reactive. And the type of insurance we work in, broadly speaking, is the kind of insurance where the act of handling the claim can improve its outcome. So auto insurance, fender bender happens, you call up Geico. There is nothing that the Geico adjuster can do to uncrash your car. We don't work in that type of insurance. The type of insurance we work in is bodily injury, workers' comp, disability. Someone gets hurt, they are injured, disabled, whatever, the insurance company is going to pay them until they're not. And so they have a vested interest in helping you recover faster. It is the part of the insurance world that is not zero sum. It's actually real incentive alignment between claimants and carriers that almost never happens. Anyone who has had an auto claim knows that. But in this part of the world, it really is aligned. And so we found deep alignment with these execs that having 1,000 people in a call center following their gut instinct that are typically paid $60,000 with a bachelor's degree at best, doing complex medical review on 500 claims at a time, each claim worth $250,000. I think I'm already aligned with everyone in this room that sounds pretty horrible. So they knew that better was possible, but the previous generation of technology was mostly rules based, and this application, this complexity of medical data, this volume of information, the time series element of it, were just vastly more complex and overwhelmed rules-based systems, so they basically had all failed. And so we were also lucky enough to find an executive team willing to take a risk because they knew something was better, they just hadn't found it yet.
Wonderful. So we'll move on to Erica and Brex in a second. I think the final point that I've taken away from the EIQ story, and if you're a VC now who invested at the early stage, just close your ears and don't listen to this part. If you're a founder who wants to build, come find us immediately if this hypothesis sounds good, is that AI is valuable for triage, and it can help with large data sets to get to just before the final answer. And then you have the human beings come in, and I think that's something that's extremely powerful and has a really serious moat. And we not only see it in EIQ, but another one of our portfolio companies called Adonis that essentially helps with AI for medical billing. And it's the exact same thing where it's AI doing 99.9% of the work and turbocharging the humans and making them way more powerful. So all 5 companies up here are real companies. They're not companies that raised in 2020 or 21 when money was free. They all did, but their fundraisers were real, unlike most companies during that period. Almost no company, I think, obviously Stripe, Savage, EIQ, Gong, check. These are savage companies, but just in terms of the core savagery of the human beings, Brex would have to be towards the top. And to give you some context on Brex, for those of you who weren't in the industry yet, a very close friend went there very early. And he told me they were doing credit cards for small business and there was reward points. And I was like, you should not take this job. This is a horrible idea. This company's going to fail. Fast forward, he, as a late joiner, has been far more successful than I was at the company I founded. And Erica gets to work with him and the rest of a truly insane executive team every day. One thing that's been so cool about Brex, obviously operating in a competitive field with incredible incumbents, is that you guys, I think, have just basically been faster and more aggressive than everybody else. Can you maybe take us through maybe one case study, perhaps SVB loan product, and why it is that you guys are able to be so fast culturally, systems, product talking to sales, marketing, whatever it is?
Yeah, and I think that weekend was obviously special, and I think a lot of people, a lot of stress, a lot of pain for a lot of people. I think conversely on Brex, it was a really amazing weekend. Amazing for our business because we have a lot of customers who joined us from that weekend, seeing what we were able to do for them, but also that we were able to create those products so quickly. I think the real answer is how are we able to do it that weekend was 72 hours of not working, only working on that and not sleeping, not doing anything else, of just only focused on this. But we were able to deliver something in that timeline, I think, for 2 principal reasons. One is the way that we build financial products, and maybe to take a step back, what Brex does is, and the innovation that we had in the market was taking financial products and putting them with expense management software. From the very beginning, that was sort of core to our thesis, whether that's receipt management, integrating with NetSuite, really having a system that was more than your typical card or more than your typical payment product. So to be able to do that at scale, what we did from the earliest stages was build a financial platform, whether that was on card, on Brex Cash, we have our own ledger, and that was sort of core to everything we built. So when we think about what we build and how we build it, that financial technology stack is really, really principal, because what it allows us to do is spin up new products relatively quickly. So that's the first component, is just really having a very strong financial core that you can then leverage for new products that build off of that, where we're not as dependent on third parties or as dependent on building something net new every time we want to create something. The second piece of it, and Rob, you alluded to this, is really having a very, very close relationship between our product team and our go-to-market teams, and frankly, our customer service teams as well on the operating side. Because it's not just when we onboard a customer, right? When you go to a B2B sales process and the customer says, well, I need these 100 things, they probably need 20% of those things, but they sure want you to show them 100%. And that's fine, and that's great, and that is like really important, good feedback for what the market is thinking is competitive and what you could go do. But other really, really valuable feedback comes once customers are already on the product, and being able to get, hey, this actually changed in priority for us. How are you building it? Hey, our team needs this now. Or we have a lot of companies where we started at the earliest stages with startups, and those companies have grown, so they're now enterprise companies or they're now mid-market. They have different needs than they did 2 or 3 years ago. So being really close to our customers at every stage, not just at sales, is I think one of the more important things that we do that allows us to stay close to what the customer needs, and then that platform allows us to build very quickly on top.
So having run a early stage company for 10 years and then invested now in I think over 100 personally and at Asymmetric, everything you said sounded really good, except I think sometimes the feature request list, when you have a disparate customer base that themselves is having lots of changes in their underlying business, and there's always infinite opportunity and everything seems attractive until you've actually tried to build it and sell it. Tell us maybe about a time when something was less well fated and it had to be killed.
All the time. And that I think is important, like in any product building cycle, to be able to identify what isn't working and iterate on that. You'll waste a lot less time and a lot less money by actually just killing things than you will letting things linger or trying to resolve something that ultimately was ill-fated from the start. We have a very public version of this with the small business card and program that we closed down a little over a year ago. And I think that was certainly not our best PR effort. No offense to anyone on the team then. We all did our best, but it was not great. And I think what we did realize, though, and why we wanted to shut it down, I think was still the right decision, even if we executed it maybe not as well as we could have. But closing it down was important for us because we actually weren't building a product for that customer base. And so when we think about like, hey, can we serve this customer really well? Are we building something that this customer wants? And are we getting the feedback from that customer base that makes sense for us to continue to develop and grow this product? The answer was no, right? And so we had to, even though people were upset that we closed it down, sure, we had customers on the product, but that wasn't going to be something that we were going to be able to grow our business with. And so it just didn't make sense anymore.
Wonderful. So Gong, it's wonderful to have such great companies because I don't have to do any kind of massaging or packaging or this company is good too. These are all just unbelievable companies. So Gong, the way that we ended up buying Gong and Catalan and I ended up personally investing, our head of sales, who was by no means a big software buyer and by no means excitable, burst over to my desk one day and said, all right, there's this new category. There's 2 companies, Gong and Chorus, and you have to buy one of them after we kind of taste test both. And if you don't, I'm going to leave. I was like, okay, well, that's compelling. And we put them through a serious private equity due diligence process. And I ended up talking to the CEO of both companies for a while, which was probably really annoying for kind of like a $75,000 deal. And ultimately, Gong won over Chorus back then. And I think sort of if you look at metrics like user growth or G2 reviews or valuation, Gong's continue to win. And I think what's been really special about Gong is that you guys have maintained a high rate of growth at scale, which is hard, and you've done it in an incredibly competitive segment in basically a sideways or downwards macro for the last 2.5, 3 years. Maybe tell us a little bit on the customer acquisition side. So the first half of the conversation was obviously about search for product market fit, finding your first design partners. Gong has scaled just unbelievably well, and I would say at the core of it is just creating pure customer value. Talk us through how you guys scaled and what you're thinking about today in a marketing world that is very difficult.
Yeah, I think there's a couple of elements there. I think the piece that we always think about is how can we make more folks like your former head of sales, right? That is willing to go to their CEO and say like, hey, unless you buy this thing, like I'm not going to be here much longer, right? Like how can we make those true raving fans? The number one operating principle for the entire business at Gong is to create raving fans. And from a marketing perspective, we believe that the way you do this is you have to challenge the way that people think, and you have to challenge the status quo. And so, if you're unfamiliar a little bit with the business, a big part of what we do from a product perspective is we capture all customer-facing conversations. We understand what's being said using natural language processing and AI, and we deliver back insights to our customers to help them improve their revenue workflows. And with that treasure trove of data, we're able to challenge and educate sales leaders like Rob's former CRO. And so in marketing in the early days, we came out with a series that we called Gong Labs. And the whole idea around Gong Labs was how do we take, this treasure trove of customer-facing conversations and deliver back insights to the market? Things like how does swearing impact your deals?
That was bad for me.
Yeah, I assume you swear a decent amount.
Yeah.
You'd be surprised. You'll have a higher win
Sometimes
rate.
it energizes and sometimes it does not.
It depends.
Yeah.
It depends. Things like, if you have your video on Zoom, does that impact your win rates or not, right? So we started to really educate the market that there was more to sales than just being an art. There is truly a science to the art of sales. And that enabled us to really challenge, again, folks like Rob's CRO to go to bat for folks like Gong, because they were then educated, became raving fans of the business, of the brand. They felt like we provided value up front before we made any sort of ask. And I think that helped catapult the business forward pretty quickly.
Wonderful. One of the most, I think sometimes the best business advice you hear is the simplest. And Catalent had a software product, and it actually took off pretty well. But there was a year we were having trouble closing business, and a board member at the time, who's now the lead investor at Asymmetric, said to me, "What do you tell customers you do in exchange for their money?" And I said, "Oh, listen to this fuddy-duddy with these stupid questions." And the reality is, I think that's the right question to ask. And there's a lot of lingo and there's a lot of buzzwords. But I think in general, you can't explain to your customer, I'm going to do this for you, or the software is going to do this for you. You're going to give us $100,000 and it's going to create $2 million of value. It's probably not going to work. And I think obviously all the companies up here have done that extremely well. Hiring your first salespeople, probably the next. So you've gotten through product market fit. You figured out something that the customer wants, figured out how to tell the story to the market. Rep profiles is one of those things where a lot of people look for a kind of, it's vanilla, it's chocolate, it's red, green, blue, and I think the reality is it's always a mix. Maybe Mike, Chelsea, tell us, when you think about sales profiles for your market and your value prop, what did that look like out of the gate?
So I was our first salesperson out of the gate, as I think a lot of early stage founders are. I came from a hedge fund background. I knew about insurance because I'd studied the market as an investor, but never was an operator. And I became a student of the business. Our first kind of quota-carrying salesperson was not that. He was out of a fintech background. Awesome guy, hardworking, dedicated, basically bounced off the market in a bad way. And we learned a lot from that experience. We thought, smart would win the day and kind of, pedal to the metal, feet on the street, that kind of thing. What we learned actually is, in a lot of large enterprise companies, folks want to be sold to by someone who knows their business intimately well. And we didn't want to do that learning on the job. So, at this point, we have a relatively small sales team, especially for the ARR that we have as a company. I think we have 7 sellers right now globally. We have one in Australia, one in the UK, a number in the US. They all come from the insurance world. Some were at insurance companies, some were at Cognizant selling to insurance companies, some were different, at brokers selling for insurance companies, whatever. And so they really know the business they're in. What they don't know is AI or software typically. And we found that's fine because neither does the buyer. And we sell a highly technical product to a deeply non-technical audience, which is the chief claims officer of an insurance company in a call center in Ohio. And so, what we really need to do is actually not sell the software. The software doesn't matter. What we think about, we sell multi-million-dollar change management that changes the business. The fact that it uses software is basically irrelevant. It's cool for investors, you like it, but it basically doesn't matter for the actual buyers. They care about how are you going to use whatever you have to change my process and get a better outcome. And so if you can level with your buyer and speak their language, I think a mistake that some people make is they hire people from the industry because of their Rolodex. Rolodex is over in a month. So that I have found useless. If we're getting you for your Rolodex, you're an advisor and you get $10K a month and 3 bips if you close a deal for us or something like that. You're not a salesperson. if you can talk the talk, make relationships, and make people want to kind of go out on a limb because you know their business and they trust you, that's a salesperson that we can do business with. And so we've gone deep, there, and we have no SDRs, we have no junior people. It's a very different model than a lot of B2B sales.
Wonderful. Chelsea.
Yeah, I'd actually say a lot of what you just said really resonated with how I've thought about building the sales team at Check. And so most of our, to set kind of the stage of how our sales motion works, most of our deals that we're selling are all enterprise deals. So think of like the top 100 software platforms in the world, the Shopifys, the Toast, the Lightspeeds, really large scale platforms that are going to spend, millions of dollars of making a big bet on payroll being the next kind of, revenue driver for their business. Many of them have built payments on Stripe. And so I think initially I kind of had this like mental model of, I'll just go hire a bunch of ex-Stripe people that like really get payments and they can just kind of insert payroll and everything will work. While that had been partly true, I think the other part of hiring for this role is that you really need to find someone who is like so obsessed with solving your customer's problem. And your customer might not know they have a problem because they don't offer payroll today. And so it's someone who, really can do the enterprise sales motion. I call it like 50% really excellent enterprise seller, has the mechanics, can, run a really tight negotiation. The other 50% is someone who's highly consultative, super, super curious, is going to like be very persistent in not just like educating the executives, but a lot of the times our deals go all the way up to the board, and having that confidence and that sophistication to get someone really bought in on building a payroll business, it's challenging. And so I really look for folks that kind of like spike in both of those areas. And then when I think about kind of like my entire team as a whole, I really think about hiring folks that I think have high potential, and then hiring folks that I really think can come in and step in to the role right away because they have experience. And then kind of the blend of high potential and experience, you kind of just get this like magical group of individuals that kind of can really lean on one another and spike also really high on collaboration. So that's kind of what we've been doing at Check.
Wonderful. And I would summarize all of that as saying, if your salespeople don't have empathy for the customer and their problem, they're very unlikely to be successful in my firsthand experience. We're going to do 2 more questions up here, a couple from you guys, and then everybody can sprint to the bar. Channel sales, kind of the more taste, less filling in this market. A lot of the companies that have scaled unbelievably quickly have not really had a direct sales force, or at the very least have pushed a lot of their revenue through the channel. Obviously, downside of the channel, you end up disintermediated from your customer, and typically your channel partner wants some of the obviously some of the money along the way. So maybe Erica, Jared, tell us about channel sales at your companies.
Yeah, I mean, at Brex, channel sales were really, really important for us at the beginning, and they remain really important for certain segments of the market. So when we think about an early stage customer, we have great relationships with a lot of incubators like YC and Techstars and others. And those are really important because there's a ton of customers that we need to meet, and having a sales team that would one-to-one cover them just A, wouldn't be economical, and B, we would not be able to like physically go out and meet all those people. But those accelerators actually map really well to having like one rep go out to an event with YC, or be like a great person for these teams who, frankly, like they've got a lot of other things to do, like their credit card, their financial product isn't that important. So it depends a lot on the customer base. And then as we scale up and as the contract value increases, that's where channel sales become more of awareness, right? So partnerships that we have with NetSuite or with other vendors that we can sort of make advocates of us, but they're not going to close the deal. And that's, I think, where it becomes more important for us to have an actual AE who's working with SDRs to really close deals and win larger contracts.
Yeah, I think channel sales are so important. We think about this in a number of different ways. I think the first place my mind went to is sort of a cop-out, which is product-led growth being the best and most efficient channel. If you can build a product that sells itself and does not require an SDR, AE, executive to sell, you're great. But the channel sales that we have always kind of aligned with, actually very similar to Erica's, Stripe went through Y Combinator, and we've been very aligned to the startup ecosystem, in addition to staffing fully dedicated teams like mine to the startup segment. we have a separate team called our startup partnerships team. And their job is to build relationships with great early stage VCs across the US and the globe so that we win their entire portfolio companies upon the pre-seed check being cut. Rob, your team, I'm sure, is on top of this. And we want to win these businesses early and grow with them. That's a huge channel. I think the second channel that's a little more unique to Stripe is that we invest in vertical SaaS companies as a cohort. And I know Chelsea, who I worked with at Stripe and now is selling to the same customer base at Check, we think of that entire segment as an extension of our sales team. And so a great example of that would be someone like Shopify, an e-commerce merchant. They are bringing on hundreds of thousands, if not millions, of e-commerce merchants a year, and we don't have to talk to very many of them upfront. That is a phenomenal channel, and the reason that works so well is that Shopify has a positive incentive and an economic incentive to acquire customers on our behalf, white label and sell them payments, and bring them onto our platform. And that was all done from a deal that was probably done 10 years ago, and we are still reaping the benefits of that today.
Wonderful. All right, Russell, last question. Close us out with these questions, and we'll go to the audience. Gong has scaled unbelievably rapidly, virtually, as we recently actually had your CEO on speaking to all of our founders. I asked him what regrets he had along the way, and he said virtually none, which is impressive and certainly not the way I've gone through life. But for you at Gong, if there was one decision you made early on in sort of the 0 to 1 process or the 1 to 10 process, what decision was it that you would have made differently?
Yeah, I wish I could also say, as a go-to-market leader, that I have no regrets. I think I have to be honest, there are some regrets. I would say that the biggest regret that I had, I think from the 0 to 1 kind of phase, was not investing in enterprise in a material way and not understanding how long it was going to take. So Gong had a couple of enterprise customers kind of early on, and we were fortunate to have those. We did exceptionally well in the mid-market, and then we eventually started to do exceptionally well in SMB. And enterprise was something that we didn't go hard enough after early enough. So like if you are going upstream, like just be prepared that it is going to take longer than you expect. You cannot hire your first strategic seller or first enterprise seller and give them a 9-month ramp and be like, we are going to be good to go, just multiply the number of reps and we're ready to rock. That's absolutely not the case. What we unfortunately did at Gong in the early days, and we've since course corrected and that's driven a ton of success in enterprise, is we hired reps, we treated it as a sales and marketing problem as opposed to a company challenge. And so once we started to become much more well coordinated with some folks like the customer success, the professional services group, and obviously the product team, and really attacked enterprises as an entire company effort, that's when we really started to see the success. But we should have done so much earlier on. I think we would have been better off that way too.
Great. Okay, audience questions. The rule is identify yourself, say what you're working on, and ask your question. And the first question is going to be, this is where you raise your hand if you have a question. Right there.
Hi, my name is Sharifa. I'm actually a product manager at AWS, and I was curious for the folks who were sharing about the design partner process, how can the other functions that you work with sort of better support identifying and sort of working with you through that process? And on a related note, I've been in organizations where it's like, depending on who you talk to, the customer said A, B, or C, and trying to kind of align everyone around exposure to the customer, getting their feedback. How have you sort of handled that internally when, as sales folks, you're often, one of the first people talking to them in the earlier stages of a company, and then over time it feels like companies mature into a space where everyone's talking to the customer one-on-one. So yeah, just how does that collaboration work early on? What have you seen work well? What would you sort of ask of your partners in your organizations?
We've launched products in different types of insurance along the way. So, when the first one I think is a special case, it was me and my co-founder, and there was not a lot of cross-functional anything because it was just me and him. But along the way, more recently, as we've kind of mechanized the process to launch new lines of business, our product managers are in every sales call without exception. The good thing is we don't have 10,000 of them. We have 3-4 a week, and that's kind of our clip. That's plenty. But our product managers sell, and if they can't, then I question if they understand the product well enough. They don't manage a relationship. They don't manage follow-ups. They're not building decks, but they're talking on the phone. And I think we are in an esoteric space enough that showing our customer that we care enough about their actual business and understand it, and our product team understands it, versus we're these software people building some random thing that's kind of colliding with their business. It's actually integrating with their business. It's kind of landing on their business. That's a very different way of doing it. And so my sales team and my product team are joined at the hip, especially in new markets. They debrief every sales call. They prep every sales call. The sales team has a responsibility to the product team to deliver certain things, a sales deck, a prep doc, who everyone is, and the product team's responsibility is to digest that and be prepared for the call. You obviously have to staff your product team to be able to do that. That takes X number of hours in the week away from doing the other responsibilities that they have. But we really try not to silo by function, because then you get, well, I talked to this person, they said that, and I talked to this person. It's like, no. You all talk to the executive sponsor, and that's what they said. And so we just try to really kind of push the experience of customer discovery, customer interaction, as democratically as we can, without interrupting, the flow and interrupting, the kind of interpersonal dynamics.
Is that something that you push as a co-CEO to your product team? Like, hey, you have to do this. Yeah.
For sure. I mean, we are we're a pretty commercial organization. I think everyone in our company has the sense of how to drive value for customers. We have product managers that own business units. And I have a product manager that has a $15 million business. I have one that has a $5 million business. I have one that has a $20 million business. And they are the CEO of that business. And they know their pipeline. They know the products that they're making. They know where the engineering is on delivering it. It's not like you're the product manager that owns red, yellow, green of this button. That's one piece of the whole thing. No, you own the thing. Now that's because we are a very verticalized solution. I don't think a super horizontal business can run that way. But if you're super verticalized and you're solving a real pain point kind of top to bottom for one customer, I think of our PMs as CEOs of their business unit.
Yeah, we were talking about Mike's company yesterday internally before our annual meeting, and they are nerds, to be clear. His co-founder wrote the AI for the YouTube search algorithm, so credible nerds, but the most commercial group of people I've ever seen. And if you want to appeal better to VCs as an early stage founder, come off as commercial, particularly in this funding environment. We're going to do one last question.
Hey, I'm Bernardo, CEO and co-founder of Trace Finance. We do international banking for global companies. And I actually wanted to ask you guys about structuring incentives and actually commission and equity for your sales teams. Moreover, as you scale, you have a bigger sales team, and now you can just give like a more like a bigger commission versus actually having something more toned down. So wanted to have your POV on that.
I can share a little bit about that. So the way that I think about like compensation structures is that initially you're gonna get it wrong. Like when I showed up to check and I saw what our comp structure was, I was like, this isn't gonna work. And now what we really focus on is we kind of tie it to our like company level goals and objectives, which for us, our North Star is the number of payees that we're paying on our platform. The way that we back into the number of payees that we're paying on our platform is we really think about what are the large scaled platforms that we're signing on a quarterly basis that have large TAMs to then distribute, our payroll infrastructure in the form of a payroll product to then reach our payee North Star goal. And so our really simple way of basically ensuring that the sales team's goals are aligned to that is we just look at logos. Mm-hmm. So we look at X number of logos per quarter. And then the other thing that we do is we kind of introduce new spiffs. So if we want to test something out as a future way that we would comp an AE, we initially roll it out as a spiff. So one spiff that we're doing right now is a committed contract spiff. So very similar to Stripe's model, a lot of your revenue, you don't really know you can't really forecast it because it's all usage based. So in a committed contract spiff, the AE has the ability to essentially sell, better core payroll economics. In exchange, the partner will then commit to a minimum spend, which might be, let's call it like, $5 million over 5 years, but that's only 20% of their projected revenue that they're going to drive. And so again, I would think about it, how do you initially align your sales team to what your North Star company metrics are? And then if you want to test things out, roll them out as spiffs and then see how, the team responds and see if that's driving the right incentives.
Wonderful. Okay, so they say good musicians always play one song too few rather than one song too many, so we're going to cut it off there. If you're an early stage VC who doesn't work at Asymmetric, the door is in the back. The sidewalk's a little further out, so just get on going. If you're an early stage founder, we have a bunch of term sheets in the front, so come on forward and we'll fill in your legal entity and hand it out. In all seriousness, unbelievable thank you to our sponsors, which are Gong, Stripe, Bank of Montreal, and Capchase. They're all here. They all have wonderful financial products. Get some debt. The rates will go down at some point, I promise. And thank you again to our panelists, wonderful people. Brex, Check, EIQ, Gong, Stripe, and we'll see you in the bar. Thanks for coming.